Welcome to the Deep Dive, the show where we really try to cut through all the market chatter and get straight to the essential insights. Today, we're diving headfirst into the, well, fascinating world of market movements. And our specific focus, it's Opendoor Technologies, ticker symbol NASDAQ.
Opendoor, right. The iBuyer.
Exactly. And what a day it's been for them. I mean, this stock has just been soaring.
It really has.
As of, let's see, 1 p.m. ET today, August 28th, 2025, it was up a pretty significant 4.1%.
Which is already a good day.
Right. But get this, earlier in the session, it had actually peaked much higher, up as much as 11.7%.
Wow, okay. That's a big swing.
A huge swing. And if you zoom out just a bit, look at the year-to-date performance. It's kind of eye-popping. It's rocketed up 164% across 2025's trading so far.
That's quite the run.
Yes.
Definitely puts it in an interesting category.
Absolutely. So our mission today is to, cut through all that noise and really unpack the complex, often surprising factors that are truly driving such rapid market shifts.
Yeah.
And here's where it gets really interesting.
Indeed, because while the broader real estate market, where Opendoor operates as an iBuying company.
Maybe quickly explain iBuying again.
Sure. So essentially, they use technology and data to make quick cash offers on homes directly from sellers. Then they usually do some light repairs and aim to resell them pretty fast.
Got it. Tech-enabled house flipping, sort of.
In a nutshell, yes. But the point is, that market has seen quite a few mixed indicators lately. It hasn't been straightforwardly booming or busting.
Right, kind of confusing signals.
Exactly. So today's big move for Opendoor, it's clearly influenced by more than just their day-to-day business operations. It's prompting us to take a much closer look at some, well, truly unexpected catalysts.
Okay, let's unpack this then, because our first catalyst for Opendoor's rise is, well, it's a bit counterintuitive, to say the least. It actually seems to stem from comments made by CNBC's Jim Cramer. Oh, this was on yesterday's episode of Mad Money, August 27th.
Ah, Cramer. Okay, that always adds a layer of complexity, doesn't it?
It certainly can. So what exactly did he say? He called Opendoor a meme stock.
Ooh, okay. That term carries baggage.
Right. And then he explicitly stated that he wouldn't be jumping into the stock himself, hoping to profit from the huge bullish momentum it's seen this year.
So on the surface, that sounds pretty negative or ambivalent at best. Like, stay away, it's just a meme.
Exactly. Sounds like a warning almost. But what's fascinating here is how a well-known personality's comments like that can inadvertently trigger a market response that runs completely in the opposite direction of their apparent sentiment.
It's a strange dynamic.
So despite Cramer's seemingly negative take, there may be two intriguing ways this could have actually spurred Opendoor stock higher today.
Okay, let's hear them.
First, his comments, even negative ones, undoubtedly brought significant additional attention to the company and its stock.
Right. The no such thing as bad publicity idea, potentially.
Sort of. When someone with Cramer's visibility talks about a stock, even if it's to dismiss it, it just puts that company name squarely in front of millions of potential eyeballs, potential investors.
Oh.
It's hard to ignore that level of attention.
That makes sense. Just getting the name out there, regardless of the context.
And then there's a second factor, which you kind of hinted at with the meme stock label. There's a distinct segment of what we call meme stock traders.
Ah, the contrarian.
Precisely. They often take positions directly contrary to whatever Cramer says publicly.
Yeah, the inverse Cramer strategy. It's almost a running gag in certain corners of the internet. You even see inverse Cramer ETFs popping up sometimes. It's wild.
It is. So his declaration that he wouldn't buy Opendoor could very well have been interpreted by some of those traders as a signal to buy. It fuels that contrarian trading psychology.
It really is a fascinating phenomenon of modern market culture. A mix of defiance and maybe some genuine belief that his calls are often wrong, at least for their trading style.
I'm genuinely curious here, though. When Cramer basically dismisses a stock like Opendoor, calls it a meme stock, how much of the reaction is just that, psychological play and playful defiance from the inverse Cramer crowd?
Yeah, like sticking it to the mainstream guy.
Exactly. Versus how much is there a genuine shift in attention that maybe brings new, potentially serious investors to look at it, even if Cramer didn't intend for that? Does the visibility itself carry more weight than the actual sentiment behind his words sometimes?
That's an excellent question. And honestly, it's likely a bit of both. You definitely have that immediate surge, which feels very psychological, driven by those contrarian traders, often amplified by online communities like Reddit or Twitter.
Right, the sort of collective action.
Exactly. But the increased attention is a broader effect, as you said. Even if some viewers hear Cramer and immediately dismiss Opendoor, others might just hear the name, maybe for the first time, get curious, do their own research.
And decide they like it for completely different, maybe fundamental reasons.
Precisely. So while the initial spark might be psychological and contrarian, the lasting attention can sometimes bring in more fundamental-driven interest. It's a really complex interplay between that first reaction and the subsequent discovery process.
And it's probably important to add a bit of nuance here that our sources point out. Opendoor stock is actually kind of known for making these big moves on little or sometimes no specific company news.
That's true. It's got that reputation, partly due to its relatively smaller market cap compared to, say, tech giants, and it tends to have a high proportion of retail investor interest.
Which makes it more susceptible to sentiment swings.
Exactly. It makes it challenging to definitively say today's gains were solely because of Cramer's feature, but it certainly offers a very compelling piece of the puzzle.
It really highlights how much investor sentiment, psychology, and even that sort of playful defiance can play a significant role in daily market swings, at least for certain types of stocks.
Absolutely. Okay, so that's one major factor, quite a unique one.
Definitely unique. Now let's pivot to our second major factor influencing Opendoor today. This one is much more traditional. It's a robust macroeconomic tailwind that hit the news this morning.
Okay, shifting gears from sentiment to fundamentals.
Exactly. A stark contrast to the speculative Cramer effect. We're talking about the U.S. Commerce Department's Q2 gross domestic product data GDP figures.
Ah, the big economic health check.
Right, released today, August 28th. And the news was actually pretty good. The U.S. economy grew at a very healthy 3.3% annual rate in the second quarter.
3.3%. Okay, and how did that compare to forecasts?
It actually surpassed the average economist forecast. Most were expecting something closer to 3% for the period, so it's a solid beat.
Right. So stronger than expected economic growth overall. How does that specifically connect back to Opendoor?
Well, if we connect this to the bigger picture, you're seeing a pretty direct link, potentially, between the nation's economic vitality and the performance of sectors like real estate.
Opendoor, being an iBuying real estate company, is obviously directly impacted by the health of the housing market.
Makes sense.
So stronger GDP growth, it often translates to a more robust economy overall, right? This isn't just an abstract number. It usually implies higher consumer confidence.
People feeling more secure in their jobs, maybe.
Exactly. And critically, being more willing and maybe more able to make those big financial decisions, like buying or selling a home.
Which is Opendoor's bread and butter.
Precisely. So a stronger economy could help support home sales activity and create a generally more favorable operating backdrop for a business like Opendoor.
Okay, so it paints a more optimistic picture for their core business environment.
Yes. And this positive GDP data is especially significant when you consider we were just talking about those mixed indicators in the real estate market recently.
Right, the uncertainty, some good signs, some worrying signs.
Exactly. So a strong, clear sign of broad economic growth, like this Q2 GDP report, it can act as a really powerful counterweight to some of that uncertainty that might have been lingering. It provides a more optimistic outlook for the whole sector.
Like a rising tide lifting all boats, or at least giving them a stronger current to swim in.
That's a good way to put it. It boosts confidence not just for consumers, but likely for investors looking at companies operating within that sector, like Opendoor.
So what does this all mean for you listening right now when you're tracking these big economic reports like GDP?
Well, it means looking beyond just the headline number itself. You need to think about how that broader economic health translates down to specific industries and even individual companies you might be interested in.
So not just Opendoor. If you were looking at, say, a home builder or a mortgage lender.
Absolutely. That GDP number is just as relevant, maybe even more so for some of those. It's a really fundamental piece of the investment puzzle. It tells you something about the underlying strength or weakness of the entire system these companies operate within.
Got it. Okay, so we have these two very different forces at play today.
Yeah, wildly different. On one hand, you've got this speculative, almost personality-driven Cramer effect.
Right, based on attention and contrarian psychology.
And on the other, you have this fundamental data-driven GDP growth number, pointing to tangible economic health.
Both seemingly acting as tailwinds for Opendoor today.
Mm-hmm.
Yeah.
Which leads us to a crucial synthesis point, right? How do these actually converge? And maybe more importantly, how should we think about weighing these different types of catalysts when we're trying to understand why a stock moves?
That's the key question.
Because to truly understand a company like Opendoor and its sometimes erratic movements, we also need to consider its fundamental bedrock. You touched on it earlier, the actual business model, its size, its financial
Like all
health.
this stuff underneath the daily noise.
Exactly. So maybe to help ground our understanding before we wrap up, let's quickly look at some of its core financial metrics as they stand today.
Good idea.
Yeah.
Because what Opendoor surge today really illustrates is that peculiar blend of, let's call it, signal and noise in the markets.
Signal and noise, I like that.
You have a robust economic indicator like GDP, providing a fundamental signal, a genuine reason for maybe some optimism about the operating environment.
Right, the rational component.
But then you have something like a public figure's offhand comment acting as a speculative push, maybe even in the opposite direction of its original intent.
The potentially less rational or at least sentiment-driven component.
Exactly. It just highlights how even the most data-driven investors probably can't completely ignore the sheer psychological forces that can swirl around certain stocks.
Absolutely. So putting these movements in perspective then, what are those underlying numbers?
Okay, so as of today, August 28th, 2025, Opendoor Technologies has a market cap of around $3.1 billion.
Okay, so not tiny, but certainly not a mega cap stock.
Definitely not. Which, as we discussed, might make it more susceptible to these sentiment-driven swings. It just takes less capital to move the needle compared to, say, Apple or Microsoft.
Makes sense. What about price and margins?
Its current price is hovering around $4.27 after today's moves. And it boasts a gross margin of about 8.05%.
8.05% gross margin.
Okay.
For an iBuying company, which is pretty capital intensive and operates on generally thin margins because they're buying and selling high-value assets, that figure, while maybe not huge in absolute terms, does hint at some level of operational health.
Right. It gives you some sense of the business fundamentals. These underlying metrics provide that essential long-term context that complements and sometimes should temper the excitement or panic generated by the daily headlines and meme stock chatter.
Well said. It's the foundation upon which all this other stuff happens.
So as we wrap up this deep dive, I think the core insight here is pretty clear. Opendoor's stock surge today is just an excellent illustration that market dynamics are incredibly complex.
Rarely simple.
It's rarely just one thing, right? It's often this fascinating, sometimes contradictory blend of immediate media attention, that intriguing investor psychology, like the whole meme stock phenomenon we discussed, and then layered on top, the rock-solid fundamental economic health indicators like GDP. It's a really rich tapestry of influences.
Indeed. And, there's always more to learn. Developing that critical eye for different kinds of market catalysts, understanding how they interact, it's invaluable.
Definitely.
Which leads me to maybe a final thought-provoking question for you, the listener, to consider long after this deep dive is over. How often do we truly challenge ourselves to look beyond just the obvious headlines?
Good question.
To really understand the multifaceted, sometimes contradictory forces that shape our financial world? Do we dig deep enough to see both the rational and the sometimes seemingly irrational forces at play?
It's a constant learning process, isn't it?
It really is. And moments like today's Opendoor surge, they offer perfect little case studies for us to learn from.
A fantastic thought to end on. Thank you for joining us for this deep dive into Opendoor Technologies and the cocktail of forces that propelled it today.
My pleasure.
Keep that curiosity burning, keep asking those deeper questions, and we'll see you next time as we continue to explore the intricate forces that shape our world.